Hello everybody, my name is Cade and welcome to my channel. In today's video, I am with Dalton and we're going to be doing a weekly update. This week we're going to be talking about investor products for real estate. So if you are someone who is looking to invest in real estate and you need specific financing to help with your deals, whether it's long-term buy and hold rentals, fix and flips, anything like that, we're going to be discussing that in today's video. So Dalton, do you want to just quickly introduce yourself and then we'll get straight into the products?
What's up guys, I'm Dalton from Movement Mortgage. I've been a loan officer for a few years now. I've been in the real estate industry for quite a while. So I know the unique needs of investors, first-time home buyers, whatever the case may be. And here at Movement we have quite a few products that can help you as an investor leverage your money and make sure you're maximizing your funds.
I love it. So if you're new to the channel, new to real estate maybe, this video might not be for you, again, unless you're getting into real estate investing. Before we kind of get into the specific loan products there are things that you need to understand about real estate investing. What are the ways in which you can invest in real estate? So the typical, ways that you can, first and foremost, are kind of like your fix and flips. So, that's like the HGTV bull crap where they're just kind of like, oh, we're gonna fix and flip this house and make a ton of money. Okay, so that's the first way. People do it and they do make a lot of money, but there's a way that you do it. Okay, the second way is really just kind of like long-term buy and hold rentals. This is honestly how most millionaires in the US build wealth. They just, whether it's their personal residence, and this episode it's more along the lines of they're buying whether it's multifamily or just regular single family houses. Maybe they're doing some short form type of rental like Airbnb, VRBO, things like that. That's kind of just like the buy and hold model. You're just buying a piece of real estate and then renting it out long term for cash flow. And then really the third way that you can do it is through development. And development is where we could take a piece of land, build up, and then actually either sell the property or hold it and long-term rent it out. So there's multiple facets when it comes to real estate. I think, Dalton, you have a product for kind of really any of those three main ones that we'll be going over today. Is there anything else you want to add to the different kind of classes or segments you can?
Yeah, so I mean, it really just depends on your niche, right? You can be a flipper where you're making more money in the short term. You can be a long-term investor and you can build wealth over time. It really just depends on what you're looking to do and what you want to make your niche. I think as an investor you really want to find your niche and stick to that. You can do a couple things on the side, but I think really if you want to be successful, you want to find what works for you and what you're good at and just take it from there.
And try to do it at scale, right?
Exactly.
Because there's guys who develop and that's all they do and they're extremely successful. I really think that's anything. If you're even getting into real estate as a career, like we see that a lot. Dalton's in lending, I'm in sales as an agent. And so, we found like the most successful people are the people who do one thing extremely well over and over and over and over and over again. And that's all that they do. And so, to Dalton's point, if you're gonna get into real estate investing, pick one of those avenues and just get really good at that. And then after you're making a lot of money or extremely knowledgeable in one area, you can kind of work into other facets. But let's jump straight into fix and flip. Let's talk about the loan product you have there. I know you discussed it a little bit today.
Yeah, so at Movement Mortgage we just rolled out a new fix and flip loan. It's not typically a product you see a lot of lenders doing. However, I thought it was worth mentioning in today's sales meeting just because, we want to know what we have out there for us and we want to make sure that there's something for everybody. When it comes to fix and flips loans, it's really a short-term type of financing. So you find a property that you want to, let's say, rehab, you can take a loan out on that and do short-term financing. With fix and flip loans, it's typically going to be, about 12 months where you can buy that property, rehab it if you will, and then you can refinance it into a more traditional product if that's what you want to do. Or if you want to sell it, that's also great. But with this product, it's a 12-month hold. So you do a 12-month loan on it. You do IO payments or interest only, and you can do either draws on the rehab or something like that. But this is a really great product for investors who want to just do that kind of short-term money thing. And if you are interested in that, reach out.
Yeah, we'll kind of get into more of the buy and hold product that you have, but I think, in my mind, fix and flippers, usually they fix, and then the idea of the flip is that they sell it back on the market for a premium. But to your point, you just kind of said you can even refinance it, which we were discussing earlier. I think that's a really cool way to build your buy and hold portfolio, right? But use the fix and flip loan, rehab a property that needs it, and then instead of selling the property, just refinance it, rate and term it, we call it, and then use it as kind of a buy and hold product. But that makes sense on the fix and flip. So you said interest only. Can you just briefly describe what that means?
Yeah, so interest only is essentially what it sounds like. So instead of, let's say you have options of an amortized loan and an interest only loan. With an amortized loan, let's say you take out a loan over 30 years and you do principal and interest. That payment is broken up into your interest plus a portion of the principal, typically scaling up as time goes on because you're paying less interest on a higher principal balance. So essentially that's going to be any of your traditional mortgage products like FHA, conventional. You're doing an amortized loan. So you're paying it off over that set period of time versus interest only. You do interest only for the term of the loan, and then there's a payment of the entire principal due at the end.
Gotcha. So the payments that you're making on a monthly basis are only attributed to the interest and not the money you borrowed. It's just the cost
Correct.
of which you borrowed.
Correct. So, and that's good for investors in the sense that you're reducing your holding costs.
Right. Understood. And the idea is that they can either rate in term or sell the property by the end of, within a year and then recoup their money.
Correct.
Okay. Tell us more then about the buy and hold product that we've been kind of discussing today.
Yeah, so there's a lot of different options for investors to buy and hold. So you can do a conventional loan, you can do an investor loan. The problem with that is, and not for everybody, but if you're an investor and typically, you might be self-employed where your taxes don't really have the income that you need to be an investor, or let's say you own a bunch of properties and your rent's not where you want it to be. With one of these products, it's called a debt service coverage ratio product. Basically what it means is if your prospective rents on the property outweigh what the mortgage payment is, which you want to do anyway, right?
Yeah, right.
Your investments to make money. It can make sense to, be a little bit lower if you are just, banking on equity gains or something like that. But typically you want it to pencil and you want to get a little bit of net income out of it. That's where this product comes in. As long as that debt service coverage ratio is above 1, so your mortgage payment is just less than the rental, you can qualify for this loan. A couple of other nuances, but that's something we'd guide you through.
That's awesome. So, and you mentioned you can have 22 of these.
Yeah, you can
right?
finance up to 22 properties with this loan.
So you could finance up to 22 properties with the DSCR loan. Again, that's going to be more of like the buy and hold model. And then it's also a 30-year amortized loan, right?
So you can do 30-year amortized. There's different types of terms you can do. You can do IO if you need to. But if this is going to be something you're going to be holding long term, there's a couple schools of thought. You can do the amortize, or what you can even do is you can do an IO payment until you're ready to refinance it into a conventional loan and then do so at that point. But doing the 30-year amortize is not a bad idea.
That'd be amazing. So could you do, I'm kind of going off track here, but could you do, because you cap out at 11 conventional loans?
Typically 11. Mm-hmm.
So could you do 11 conventional and then do 22 DSCR? Or there's got to be some caveat in there.
There's some limitations.
Yeah.
I would say if you're getting up to that amount of properties, you're probably not doing traditional financing at that point.
That's fair. That's fair. Anyway, food for thought. Guys, that's going to conclude it for this video. If you guys have any questions about investing in real estate, financing for real estate, or even just buying real estate, maybe you just want to buy your first home, reach out to me, reach out to Dalton. We'd be honored to represent you guys. Otherwise, we'll see you in the next video. Thanks for watching.
Thanks, guys.